Welcome to Adding Dollars. In this video, I'll be going over my weekly update on the highest volatility stocks. So stocks that are paying the highest premiums for covered calls and cash secured puts. Before jumping into this week's video, if you're new to cash secured puts or covered calls, make sure to check out the videos in the description. Now let's go ahead and jump into this week's high volatility scan. As always, I'm in the Thinkorswim platform and I am on the scan tab, and we're going to be scanning the S&P 500. So let me go ahead and set it to that list and then click scan. We now have a list of all of the stocks in the S&P 500 sorted by highest implied volatility at the top and then descending from there. This is after hours data, so some of this may look different when this video comes out or when the market opens. At the top of the list, we have Super Microcomputer, and currently trading at about $47 with an implied volatility of about 100%. And it also looks like a lot of stocks have earnings coming up relatively soon, which kind of explains the increase in implied volatility that we're seeing. Let's go ahead and look at the option chain for Super Microcomputer and see what kind of premiums it's currently paying out. So jumping over to the trade tab and switching to Super Microcomputer, I'm going to be looking at the 8 days out options, so options expiring the following Friday. And as always, I have this custom column on my platform called percentage premium. This custom script calculates the percentage profit for selling a cash secured put at a specific strike price and also gives you an estimate for percentage profit for selling a covered call at a specific strike price as well. If you're interested in adding this column to your own trading platform, check out the link in the description for instructions on how you can add this for free. Now let's go ahead and start with cash secured puts. It looks like you can make about 1% or about 1.1% selling the 40.5 cash secured put. This means you would collect about $45 in premium for each cash secured put that you sold. And the risk here is if you did end up getting assigned on this position, you would need 40.5 times 100 because each option contract is worth 100 shares. So that means you would need $4,050 in order to purchase 100 shares of this stock if you did end up getting assigned. If you wanted to make a higher percentage premium, let's say almost 3.33%, then you would need to sell the $45 cash secured put, which means you would be able to collect about $150 in premium. And your risk here, if you did end up getting assigned, you would need $4,500 in order to purchase 100 shares. On the covered call side, you could buy 100 shares right now for $4,758, and then you could go ahead and sell the $48 call options and collect about $245 in premium for selling that, or about 5.21%. Let's go ahead and jump back to the scan tab and look at a couple more. Let's go ahead and look at the next one on the list, which is Enphase. It looks like it has earnings coming out next week on the 22nd, currently trading at about $91 with an implied volatility of about 91%. Let's jump back to the trade tab and see what kind of premiums it's currently paying out. Again, looking at the 8 days out options, so options expiring the following Friday, it looks like you could make about 3.19% selling the $84 cash secured put. That means you would collect about $260 in premium for selling this cash secured put. But the risk here is if you did end up getting assigned, you would need $8,400 in order to purchase 100 shares. On the covered call side, you could buy 100 shares right now for $9,157, and then you could go ahead and sell the $92 call options and collect about $575 in 8 days, or about 6.3%. Let's jump back to the scan tab and look at one more. Let's go ahead and look at Dexcom. I don't think it's one we've looked at previously. It looks like it has earnings coming up soon as well on the 24th, currently trading at about $69 with an implied volatility of about 79%. Let's jump back to the trade tab and look at the kind of premiums it's currently paying out. On the cash secured put side, it looks like you could make about 3.3% selling the $62 cash secured put, or about $200 in premium for selling this. And the risk here is if you did end up getting a sign on the position, you would need $6,200 in order to purchase 100 shares of the stock. On the covered call side, you could purchase 100 shares for $6,955 and then go ahead and sell the $70 call options and make about $480 to $490 in premium, or about 7% in premium in 8 days. Both of these last two stocks do have earnings coming up next week, so they will potentially be volatile when earnings come out, and they could move higher or lower depending on how the market reacts. Feel free to pause the video and take a look at the full list of highest implied volatility stocks in the S&P 500, and feel free to leave any questions or comments down below. Or if you want to see my analysis on any other stocks, feel free to leave that down below as well. And if you want to help support the channel, don't forget to like and subscribe, and I'll see you all in the next one.